Greetings, my amazing traders. Welcome to this new episode, market structure mapping. Alright, so we talked about market structure last week. So I want to break this market structure down to you and how you can start analyzing your trade. Alright. So in this episode, this is market structure. This is market structure mapping. Alright, this is what we are going to be talking about. How you can map your correct market structure. Alright. So let's go deeper. So the first thing on our list is minor trending market. Alright. Minor trending market. So this is just a swing trend. Alright. So in a swing trend, what we are expected to see is higher high, higher low, higher high, higher low, higher high, higher low, higher high, higher low, higher high. So I told you that whenever a market is giving you a progressive upward move, higher high, higher low, it was a break of this high here, it retraced back again. This is retracement. Please, these forest terms, you need to make use of them. Alright, so a market moves up here, then retrace. Alright, so this is retracement. Market retrace, move higher again, breaking the recent high here. Alright, let me see if I can do that possible. So break this high here, retrace back again, and break this new high here. Alright, so we have a new higher high again, retrace back again, and give us a new break of this high. So this is a break of high. Alright, market retrace back again and give us a break of this high. So we'll keep having series of higher high, higher low, high high, higher low, high high, higher low, high high, higher low, high high. I believe you understand this swing move. Alright, I've already explained this on my previous video, so I won't be taking much time on this aspect. So this is a bullish swing. Alright, is a bullish swing or bullish trend. Alright, I've already talked about it. So let's go to the other one. So this is a bearish trend. I told you that either the market is selling or they're buying. Either buyers are in the market want to buy, or sellers are in the market want to sell. So this is a downward movement. Alright, this is a downward movement, a downward progression. Alright, please be taking note of those words I'm using, those what is it called, those forest slangs. Please be taking note of them, they're very, very important. This is lower low, lower high, lower low, lower high, lower low, lower high, lower low. This is a downward progression. Alright, it's a downward move. This is a downward move. You can see this for yourself. This is a downward move that the market has been moving downwardly. Alright, you can see that market is moving downwardly, and in this case the market was moving upward. Alright, so this is also how you can draw your trend line. Now you see that in this sense, price is going up and you are expected to buy. Alright, and now price is going down, you are expected to do what? To sell also from here. Here we have a break of this high, a break of this low. Price move down, retrace up, break this low. Alright, price push down again, retrace back again into our POI. This is POI, right? I'll show you when we go deeper. Break this low also, After the break of this low here, price you trace higher to mitigate an order flow here and push to break this low. So we tend to have what? A bearish trend here. This is a bearish trend because we're having a lower low, lower high, lower low, lower high, lower low, lower high, lower low. I told you on our previous video that we have three phases of the market, alright? Either it is bullish trend or bearish trend or consolidation. I've already explained what consolidation means. That the market is in a range, is ranging. Alright, market is not going anywhere, just ranging. In this particular type of market, we are advised to not to trade because the market is ranging. In this scenario now, you cannot do anything in this point, alright? You can't do anything in this point. You can see that market is just ranging between this zone here and this zone. Alright, market is just, so this is consolidation market. This is consolidation. Market. Alright, so this is consolidation. Unless you want to scalp in this situation, alright, you want to scalp that when the market move higher to this supply. This is your supply zone and this is your demand zone, alright? So this is your supply zone and this is your supply zone. Let me see if I can label it. Yeah, this is your supply zone, alright? And this is your demand zone. So when price comes to your supply zone, you can see that it didn't mitigate it here. Push it here, you are expected to sell, alright? And when price comes to your demand zone, you are expected to buy. So unless you want to scalp in this situation, this is your long tools, alright? This is your long tools. You can take a buy here. Make your stop loss a little bit lower here and target the next supply. Alright, so this is how you're able to make 1:3 risk reward. Alright, 1:3 risk reward. I know you don't understand how to use these tools, alright? You don't even know how these things work, but don't worry, I'm going to explain to you what these tools mean, alright? So this is your long tools. This is your long tools. Let me show you. These tools that is here, so is your long tools, alright? Your long tools, and you can get it from here. You can see that you can see that I've already placed my long tools here. Alright, this is my long tools and this is my short tools here. You can find it on this box here. If you click on this pencil icon, this is where your tools belong to. If you want to tap on it, scroll here. This is it. I already added it here. Long position. Alright, this is my long position and also my short position. Alright, so this long position and short position are used in the market for buying and selling. Alright, so if you want to buy, you will bring out your long position, which is this one here, and if you want to sell, you bring out your short position, which is this one here. Alright, So in this case, this is my long position and I want to be buying from a demand zone here. Alright, from this point, targeting this my supply zone here. Alright, and if I want to sell, I want to definitely bring out my short position. It's called short position. Alright, then make my SL a little bit higher than the previous zone, supply zone. Alright, my target will be the next demand zone. Alright, so this is how we use this is how we trade the consolidation market. But for me, I don't trade consolidation market because it is risky. Instead, you want to trade, want to scalp, it's still possible because above here there is liquidity above this zone here. Alright, there's liquidity. Don't worry, you don't know what is liquidity. As we keep progressing, I will show you what is liquidity and how to avoid it. Liquidity is a major concept in forex trading. Alright, there's liquidity above the supply zone and there's liquidity below the demand zone. Alright, but that is not what I'm here to show you today. What I'm here to show you is market structure mapping, how you can map your structure mapping. And at the end of this class, I'm going to give an assignment. Alright, so I know your level of your accumulation and your acceleration. Alright, so that I can know how you are responding to this particular class. Alright, so I told you this is a bullish trend, and when prices give us a high low, we tend to buy. So how can you place a buy on this trade? Okay, so this is it. So this is a break of high. This is not a break of structure. I will show you deeper once we go to the next particular point. Alright, so just keep calm. Price give us a higher high and give us a higher low. Break this high here. Alright, after a break of this high here, giving us a new higher high, it retraces back to this order flow. So there is now an order flow here. So this is your order flow. Alright, so I'm not here to show you what is your order flow in this particular point, but as we keep deep, I will explain what is order flow. Alright, how to identify your order flow. So your order flow are your POI. Alright, your order flow is your POI. You trace here, so you can bring out your long position here and place a buy here. Place your SL a little below this low here. Alright, this lower low here. Place your SL a little bit below this lower low. Let me remove this guy here so that you can see clearly. Okay, so this is it. So if you take a trade here, assuming this is a break of high here, alright, price retrace back to your POI. So after a break of high, a retracement here, you can take a long position from here. Alright, you can take an order from here. Put your stop loss below this zone. What this stop loss means that as far as this trade never break below this higher low, the trade is still bullish. Alright, that in any situation that if market retrace like this, give us a lower if price retrace and give us a lower high there and break this low here, it has disvalidated this setup. Alright, the market is no more bullish but now bearish. The reason why it's bearish because price have broken this low here. This low is not expected to be broken. For this to remain a bullish swing, this low is not expected to be broken. Alright, so as we keep deeper, we keep learning. So if you take your trade here, just be targeting 1:2 on this particular shot. 1:2, and here we have a 1:2 here. Look at it, we have risk reward ratio 2.05. Alright, look at what I'm explaining here. risk reward ratio. Trying to change this color. So this is what I'm explaining here. Risk reward ratio of 2.05. This means that you are risking 1% to get 2%. Alright, that means if you are risking $10 on this trade, you want to be making what? $20. Alright, so that is what that means. Alright, so let's keep moving. So after a break of this high here, price retrace back here, give us a break of this high also. After a break of this high here, you can also mark out your POI. Alright, mark out your POI. This is your POI. This is your sell before this buy. So this is your order flow. Alright, this is your order flow. I've made mention of this word order flow countless of time now. This is order flow. So you can buy here as far as price have not break this low. Alright, put this at your back of mind that price should not break this low. Alright, price should not break this low. At any situation, price must not break this low. Alright, that if price retrace like this, retrace and break this low, that means we are no more bullish. Alright, we are not bearish. This low must not be broken for this swing to remain the same. Alright, so that is that. So you can bring out your long position at this point also and take your trade here. Alright, place your stop loss just low above this point here. Alright, and target 1:2. You can be moving it until it have reached 1:2. Alright, so this is it, 1:2, and you see that price will normally hit your TP. Alright, so this is how you can take your trade. Alright, so this is how you can take your trade from price giving you a high low, high low, high low in a bullish trend. Alright, in a bullish trend, so this is how you can take your trade in a bullish trend. Alright, so that is it. That is how you can probably take your trade. Alright, so the next on our list is the same thing but an inverse pattern, which is your bearish trend. Alright, so we see the market giving us a lower low here, lower high, lower low, lower high, lower low, lower high. Price came here, break this low here, giving us a break of this previous low. Alright, retrace back again and break this low. So this is the same thing. Alright, this is the same thing. You can always, after a break of low here, you can mark out this zone as your POI. Alright, you can mark out this zone as your POI and bring out your short position and sell from here. Place your SL, which is your stop loss, targeting 1:2. So this is it. Alright, so this is how you can take a trade from here. Alright, so that is it. And then we have a new break of this zone here. Price retrace back again, so you can see mark out this zone here as your POI and also bring out your short position and sell from this zone here, targeting 1:2. Make your SL a little below this zone here. Alright, so this is how you can probably make money from trading. Alright, so this is simple, right? So this is how we make money from trading. Alright, we buy once you see a break of high here, retrace back to a POI, either an order flow, an order block, or an unmitigated POI. Alright, so that is it. You wait again, price break this new high here, retrace back again. You take your trick and can buy from here, because this is a retracement of this low. As far as price have not broken this low, you can buy from here. Alright, price break this high again, retrace back to this zone again, to this POI, you can buy from here. Understand? Until price break this low, this now become a change of this swing. Alright, a change of this swing, not a change of character. This is a change of this particular swing, and this is now a bearish swing. Alright, I told you that this is minor trending market swing trend. Alright, so this is minor trending market swing trend. Alright, so that is it. So as we keep diving deeper, you understand this concept very much easier. Alright, so in a recap before we go to the next part, so in a bullish trend where we are having high high, high low, high high, high low, high high, high low, high high, high low, high high, you want to be buying. Alright, just following this particular swing, you want to be buy from here, and this retracement, buy from here, break this high again, retracement back to this zone, buy from here again to break this high. At this retracement, you don't want to buy from this point. Alright, you don't want to buy at no level, you want to buy at the retracement of that particular swing. Alright, if you are trading this kind of market swing move. Alright, so that is it for that. This bearish trend, price giving us a lower low, lower high, lower low, lower high, lower low, lower low, and lower high and lower low. Alright, so that is it. I hope you understand this particular minor trending market bracket swing trend. Hope you understand it. If you don't understand this concept, you can go back to our previous video. I've already taught a video upon this move. Alright, I've already dropped a video about this move already. Now you can understand this move and make use of it. Alright, so I believe if you go back to the first video and watch the video and come back to watch this video, you definitely understand this concept. Alright, so let's dive deeper to the next move. Alright, so in this second one we have major trending market. So this is like an advanced pattern. Alright, this is like an advanced pattern of this particular minor trending market. So this is minor, so this is like a major. Alright, this is the major trending market. Right, so we have the minor here, minor trending market, and this is the major trending market. So this major trending market is like much more deeper on this point. Alright, in major trend market we don't buy from this point. Alright, so this is a one swing movement. Alright, so you understand as we keep diving deeper, you will understand as we keep this learning process. Alright, so this is major trending market, this is an advanced pattern. Alright, this is an advanced trending market. So in this major trending market, we tend to look for a BOS. A BOS means break or structure. Alright, BOS means break or structure. Please, I told you that whenever you are watching this video, always be with your book and your Bible so that you can take note of some of the forex language I'm using, the forex slangs I'm using, forex techniques I'm using. Alright, so that you can make use of them also, or not be confused whenever I'm using them in other videos. Alright, so this is BOS. Whenever you see BOS, it means break or structure. alright, under major trending markets. Alright, so in major trending market, we are trying to look at BOS, the first one. The second one, we are trying to look at IDM, which is inducement. Alright, IDM, it means inducement. Let me just write it. IDM, it means inducement. IDM, it means inducement. It means what? It means inducement. Oh my god, this tend to you're trying to, but you can see it, right? Sorry for this thing, because it just keep pumping up. It's not supposed to be like this. So sorry guys, I'm trying to explain this, what this forest terms mean. So this is forest terms, this is forest terminology. So whenever you see inducement, this is IDM, it means inducement. And normally I do represent it with S, or understand. So whenever you see S, it means inducement. S means inducement. S means what? Inducement. Let me just write it so that you can see it. Inducement, I always use S as my inducement. Alright. Yeah, so I will use this S as my inducement. Let me change the color here. Alright, so IDM means what? Inducement, and I always use this S symbol to represent inducement. So whenever you see my structure mapping and you see S, it means inducement. Alright, so this is POI, which is the next on our list. The next on our list. Oh my god, I don't seem to get. Yeah, I want to be seeing these two together. Okay, so this is it. So we say we have major trending market, and what we want to be looking at, we want to look at the BOS, the IDM, which is inducement, and it have a S symbol, so I always use S as my inducement. Alright, and the next on our list is POI. So we want to see our POI. So POI consists of the order block, the order flow, the supply, and demand zone, all mitigated weak. So these are all POIs. Alright, these are all POI. I'm going to be giving a dropped big disease of this concept, the order block, the order flow, how you can identify them in my next video. Alright, so the next on our list is chalk and eye chalk. So what does chalk and eye chalk means? It means change of character. Alright, let me just type it so that you can see it. It means change of character. So chalk means change of character. Alright, while eye chalk means internal change of character. The I stand for internal. Alright, internal means minor. Alright, so we have chalk, which means change of character. Eye chalk means internal change of character. Alright, so the first one is change of character, the second one is internal or minor change of character. Alright, and the next on our list is number 5 is premium versus discount. What does premium versus discount mean? I'm going to be explaining that as we drive deeper. Alright, and the last on our list is liquidity. Liquidity is what fuels the movement of the market. Alright, liquidity. So this is what we are going to be explaining on this particular section. Alright, so please let's dive deeper. Alright, so I drew a structure. Where are my structures, guys? Okay, so this is the structure here. So I told you on the first structure I drew that whenever price is giving us a higher high, higher low, higher high, price must not break these points. Alright, but in this section of this particular course, this major market trend, this is a break of high. Let me just mark it. This is a break of high here, and after this break of high here, we want price to take out inducement. Understand? So after a break of high, the low of this candle, which is our higher low, is our inducement. Inducement is sitting down here, and we want price to come and take out inducement from here. Alright, so price came back here. This is a pullback. If you have watched my previous video, I talk about pullback. Alright, so after price giving us a retracement here and giving us a break of this high, we want to see market come back here and took out inducement from this part and mitigate our POI, and we can take our short from here. We can take our short from this point. Alright, we can take our short from this point here. Place our SL little bit here. Target 1:2 or 1:3. Alright, so this is it. So this is more like an advanced pattern. Alright, this is more like advanced pattern. So after an inducement taken, the next high that was broken is our breakout structure. Alright, this is breakout structure. So this particular break here is different from this break. Alright, let me remove this guy so that we can see clearly. So you can see clearly now. So first we have a higher high here, higher low. Price move up here, break this high here, retrace back here to sweep this low here. This is our inducement. Alright, so this is inducement. You know, we talk about inducement. Alright, so we'll talk about inducement. So we'll talk about inducement under major trending market, that we have the bill where the inducement, which is our S. So I want to show you where the inducement is now. So this is the inducement now. So this is the inducement. I'm not showing you now. This is the inducement. So your inducement is found below this low here. This is our high. Let me just quickly write it. This is our high. Come on guys, trying to reduce this. So this is our high here, and we have our higher low here. And we have a new high here. Now I told you on our first drawing, our first market structure, our market structure mapping, that whenever price gives us a high, retrace back and give us a new higher high. This is now become our higher low. Alright, we don't want to see market break this low for this market to continue this swing. Alright, but this is an advanced part. Alright, this is an advanced part. And you will need to adapt to it. This is an advanced market structure mapping. This is why it's called the major market structure mapping. So in this major market structure, we want to see this low to be taken, this higher low, this low here to be taken, and mitigate our POI here. Alright, and we cannot take a long position from here. We cannot place our order exactly from this point here. We can place our order exactly from this point here, and we target the new high that is here. This is our break. This now become our break of structure, targeting this particular high. This is our break of structure. And if you look at this value here, we have what? Look at this value that is here. We have risk reward ratio of 1:6. It means that if you are risking $1 on this trade, you'll be making how much? $6. Alright, that's what it means. And if you are also risking $10 on this trade, you'll be making how much? $60 on this trade. Alright, so this is how we make the money on forex trading, by just doing our mappings. So after a move here, giving us a higher low, break of this higher, price retrace back here, took out inducement. This is our inducement. I already told you that our S here is our inducement. Our S is always below this recent higher low here. Alright, this is our recent higher low, and this is our inducement. Alright, so when we go to the chart, you will understand deeper. I just want to be much more realistic at this moment to explain this particular concept. So there are two types of break here. First one, we have a break of this high. This is a break of this higher here, and the second, we have a break of structure. These two are different. Alright, these two are definitely different. They are not the same. Alright, they are not different, and I want to explain now. Please pay attention. The first break here do not take any inducement. There was no inducement at this higher high to before it break. But the second break of structure came back here and took out this inducement, took out this low, which now give us a break of structure. Alright, so if we are having a market like this, so we haven't gotten a break of structure, though this is not break of structure, this is a break of high. Alright, this is break of this high here, break of this high here, and this is minor what? This is, we call it minor swing trend. Alright, so this is just one swing which I'll talk about. This is your high low, high low, high, until the market now give us something like this. Before we have a valid break of structure, price move up, give us a high, retrace back, give us a higher low, break this particular high here, give us a new high. The markets come back, retrace to take out this inducement. Alright, take out this inducement from here and give us a new break. This is where we now have a valid break of structure. Hope you understand this concept, guys. This is where we now have a break of structure. But because price took out what? Inducement from here. Price took out inducement from here. Alright, so I believe you are understanding this concept. So the second on our list is what? The second on our list is, we have talked about BOS, we have talked about inducement, we have talked about POI, and now this is chalk. Now let me explain what chalk means. Guys. Let me explain what chalk means. Where is this drawing? Okay, so this is what chalk means. So you can see that I mark out my chalk here. I said this is change of character. What this means that you can take or trade. So price can literally retrace. But what we don't want to see, we don't want price to break this low here. This low that took out this inducement, alright. You can see price retraced from this point here and took out the low of this candle. After taking out the low of this candle and give us a value break or structure. So we don't want to see this low broken. So this low that took out this inducement is our chalk. Why is it our change of character? Why is it a change of character? It is a change of character because it took out inducement here and give us a value break or structure. Alright, so this price took out inducement from here and gave us a value break or structure. So this is our chalk. Alright, so we don't want to see market close below this point. If price give us a close below this point, that means we have change of character. I mean price have changed character. Alright, so this is now our change of character. Let me explain with this other. So this in this video now, in this other mapping, if price retrace from this point, sorry for that, guys. So if price retrace from this point and break this low here, this is not a change of character. Alright, this is not a change of character. Why? Because this does not take out this, because this is not a value break or structure. Alright, so this is not a value break or structure because there was no inducement taken out. Alright, there was no inducement taken out in this process. So if price came back here, took out this low, so this is not a change of character, this is just an inducement for price to sweep more liquidity before reversing. But if you now have something like this, then have a value break or structure, then price now retrace back here. This is where we now have our change of character. I don't know if you understand me. So this price have not taken out this inducement. Price have not taken out inducement here and give us a valid break or structure here. This will now become our change of character. Guys, this is an advanced course, please. You need to pay attention to understand this concept. Take your time. Rewatch this video countless times to understand this concept. Alright, so for our BOS, for our break or structure, we need to see inducement to take in to get our break or structure. Understand? And for we to get our major change of character, we need to see inducement and a break or structure before we can get the change of character. Change of character means that the market is no longer going higher again, want to start going down. Alright, so that is that for that particular part here. And we also have the same in a bearish trend. Alright, so this is a bearish trend. Alright, so this is a bullish major market structure. This is how we make money from it. This is how we risk $10 to get $60. We risk $100 to get $600. Understand? You risk 10,000 to get 60,000. So this is how you can make your 60k from risking 10,000 naira. Alright, so this is how we treat this particular point here, giving us a 1:6 risk to reward ratio. Alright, so this is also in this scenario. Price gave us higher, lower low, lower high, lower low, came back and took out this low. This is now become our inducement and give us a valid break construction. Alright, give us a valid break construction. Right, give us a valid break construction there. This now become our chalk. Alright, this now become our chalk. So you can place your order at this other flow or the other block. Alright, you can wait for this retracement back to this zone here, and you can take your trade from here, bring out your short position and buy from here. Place your SL a little below here. Below your SL will be at this low of this point here. Alright, and target the recent break of structure. So this is how you can probably make money from this trade. Alright, this is how you can make money from this trade. Alright, so you now see your inducement, your break construction, and your chalk. Alright, don't worry. If you are finding it difficult to understand this concept, you can rewatch this video once more again to understand the concept. Alright, so the next on our list is premium versus discount. Alright, so in premium versus discount, what we want to see is like just like two range, premium versus discount. Now this is premium versus discount. Now, so what we mean by premium versus discount means that you can plot out your fib retracement. So this is my fib retracement. Look at it here. Fib retracement. This is it. These are your tools on TradingView. Alright, you can click on your fib retracement here, place it at the low of this swing here, and target this high here. So this is your premium versus discount. Alright, this is your premium versus discount. So the first upside is your premium, and you want to be selling from your premium. Your premium is from the high to the 0.5. Just locate the 0.5. At this point here, you want to sell. At this point here, you would like to sell. At this point, you would like to sell. Why at this point, from this 0.5 is our discount, and you would like to what? You like to buy from this point. So to this point you want to buy. You want to buy from this point. Why this point you want to sell from this point. Alright, so this is your premium with discount. Don't worry guys, you understand this concept as we keep diving forward. Alright, so your premium with discount is half of your swing move. Alright, and you can easily identify your premium versus discount so very easy by just bringing out your fib retracement tools. Alright, bring out your fib retracement tools, place it at this low here, and from this particular low here, after tapping on this low here, bring it to this point here. This is how we get our fib retracement tool. You can see all this line here. This is 0. this is 0.2, this is 0.3. This from this 0.5 to 0 is your premium. Understand? So from 0.5 to your 1 is your discount. This simply means that this is half. This from here is your half, here is half. So from this half here you want to sell. All right, so you can see a selling opportunity to sell. But once price have mitigated this point, your 0.5, 0.6, 0.7, you want to look for long opportunity. Alright, want to look for is a buying opportunity. That's what the flip retracement mean. And the last on our list is liquidity. So this is what I'm going to explain last. Liquidity. So what is liquidity? Liquidity are your stop loss where you place your order. There's liquidity below. Alright. Example of liquidity can be your trend line. You understand? So this first, where is my mapping? God, this mapping can just go and hide. So this is liquidity build up. You can see market giving us a high, higher low in this progression. So this is liquidity. The reason why it's called liquidity because there are a lot of orders at this point. There are a lot of selling orders at this point here. Buyers are buying from here. Buyers again are buying from this zone here. Buyers are buying from this zone here. So there are a lot of orders here without liquidity, without inducement. This is just a minor swing trend. Alright, so this minor swing trend are all liquidity move. Alright, so you can see a big massive push, to stake out all this order that has been placed on this point. Imagine you took your trade here, you enter your trade here, place your stop loss here, place your TP here, you took a trade here, you took another trade here, you took another trade here again. You are just following this particular minor. So this is a minor swing. Alright, you are buying from here. At this mitigation, you buy again. So you're happy that you're making profit, but suddenly you see a market just come to clear all this liquidity, understand, and start giving you a bullish move to give us a new break of structure. So this will now become a break of structure. Why is it break of structure? Why? Because it have taken out inducement from this point and it have sweeping liquidity. Liquidity are your stop loss order. Where you place your stop loss is your liquidity. Price has taken out liquidity by sweeping, closing you out, alright, and giving us a valid break of structure. So that is liquidity. Alright, so you see how liquidity as your double bottom in a consolidation market where we have price not going anywhere. This is consolidation market. I already talked about consolidation. The price is just moving the bus. Price is just moving at this bus. Price is going nowhere. Price just moving at this bus here, and also moving at this point here. So in this pattern, you can see people will be buying from this zone here. People will be entry train. I see people buying from here, placing their stop loss here, targeting this particular supply zone. Tell you that this is your supply zone and this is your demand zone. So a lot of traders will be placing orders here. So what liquidity now will now do is that liquidity will now come like this, stop them at, and even come and stop these people at again here. So this is liquidity because price was just in a consolidation phase, alright. So that is that. So I believe you are able to understand this breakdown of these market phases which we just explained, alright. So we first talk about our topic is market structure mapping, and we talk about minor trending markets, which is your high low, high and high low. This is how you can take order from here, and this is an uptrend, and this is a downtrend, which is your bearish price giving us a lower low, lower high, lower low, lower high, alright. And we'll talk about consolidation market. Price is not going anywhere, just consolidating on this bus, alright. And next on our list, we talk about major trending market. In major trending market, we want to be seeing our break of structure, our inducement, our POI, which is our order block, order flow, supply and demand zone, unmitigated weak, chalk and high chalk, premium versus discount, liquidity. Alright, so this is what we have for today. So on my next class, we are going to be using the chart, alright, we're going to marking the chart together, alright. So this is just an eye view of what we are going to do in the chart, alright. This is just an eye view of what we are going to do on the chart. So on my next video, I'm going to be dropping how you can analyze from this. This is the exact framework which we are going to be looking at in the next video, but that one will be in the main chart, alright. That will be in the main chart, alright. So this is what I mean. We are going to be analyzing structures together, alright. We are going to be analyzing structures together. We'll be analyzing structure together, how we mark this structure here, how you can take your trade, alright. So this is what we're gonna be looking at, alright. So this is a trade I took this week, and we are staying on a drawdown chart, but we are still holding. So these are what we are going to be looking at. These are what we're going to be looking at on our next preview video. Alright, so stay tuned. Thank you for your patience. Thank you for your learning. I will see you on the next video. Alright, if you have any question, please kindly drop it at the comment question, and I'll be right there to answer your question. Stay tuned to the next class. Thank you.